Hello, welcome from Trade and Signal for a review of the data and events of the week beginning the 31st of July. Big week on the data front this week. Non-farm payroll, the employment data from the US. In the UK, we got the Monetary Policy Committee monthly policy decision and the inflation report and all that stuff from the Bank of England, plus sack of second quarter earnings from the US. So quite a lot to chew over. First week of August, as it's about to start tomorrow, that is, it's the start really of the main holiday season. A lot of traders and investors tend to reduce trading and risk over the next month. But just a general comment, don't be fooled into thinking that the markets will be quiet. You do get some big moves in August, and if there is a global macro event of note, then there obviously is going to be less liquidity to dampen down excessive moves. So it is a time of year when you can get some extreme moves, although not that I'm predicting any yet, but it's just certainly worth noting. Last week, markets on the defensive, really certainly in Europe, with the particularly weak dollar or the strong euro and strong sterling, actually. The FTSE shed 84 points, just over 1%. The DAX down about 85 points, about 0.75%. And US markets was sort of largely unchanged, although the Dow upticked about 250 points, courtesy in part to a big jump in Boeing stock after its results. The Nikkei down 140 points. Other than that, the euro, the dollar, I should say, was particularly weak, with the euro up 120 odd points versus the dollar over the week. Sterling up 138 pips against the dollar as well, so not even old sterling managing a bit of a recovery. But a lot of the falls, certainly towards the end of the week, was a result of the failure of Trump's healthcare reforms, which has just died another death again. And the relationship between Trump's administration and the Republican Party and the problems within the Trump administration in the White House is causing a lot of angst, and it isn't particularly dollar friendly, that's for sure. Gold up $15 on the back of that, benefiting from the weaker dollar. And of probably the greatest moves last week, probably the oil market, UK oil and US oil, Brent and WTI both up over 9%. In fact, Brent up nearly 9.85% on the back of increasing drawdowns in the US inventories, plus some action from Saudi and UAE cutting production further in August. So let's have a look at the data this week. There is quite a lot of it. We jump to Tuesday. That's the first day of any data. UK and US manufacturing PMIs, the measure of manufacturing activity in both those economies. Anything above 50 denotes an expanding sector, and as you can see, UK PMI, that's unchanged in July, with a pullback in the US expected. That's the ISM manufacturing data there. Let's jump to Wednesday, where we have the construction PMI, expected to have slipped a little from July, but certainly better than some of the worst levels early on in the year. ADP employment change, notoriously volatile. Expect a modest improvement from last month's data, but I think the market relies on this less and less, actually. And obviously, crude oil. Yes, we've just been talking about crude oil inventories, a hot topic. No, there aren't any estimates yet, but the successive weekly data, I think, has pointed to a marked drawdown in stocks, resulting in the price hikes that we've seen over the past 6 weeks. Let's jump to Thursday now, an important day, certainly for the UK, with the services PMI. That's the services sector in the UK. We're expecting a bit of an uptick in this key sector. 80-odd plus % of the GDP in the UK comes from the services sector, so it is a very important number. MPC, the last meeting from the Monetary Policy Committee in the UK, surprised with 3 members voting for a rate hike. Expectations this time, it's showing 3.05, so 3 people still voting for a rate hike. A number of economists are predicting that one dissenter will fall back in line, probably as a result of the lower inflation reading that was posted a couple of weeks ago, where we came in at 2.6 rather than a 2.8 or 2.9 that was expected. Obviously, sterling will be particularly sensitive to these decisions and what the MPC statement says. So a key event midday on Thursday. Friday, overnight, we've got the Reserve Bank of Australia monthly policy statement. Expected no change there, I believe. Non-farm payroll, the main event, the employment data in the States. Slight pullback expected in the number of new jobs, 183,000 versus 222,000 last month. But I think the job market remains quite strong and unlikely to deflect the Fed. It seems that price inflation seems to be the key these days, and the Fed, certainly Janet Yellen has said, she's expecting inflation to get back on track, which has been particularly weak in the last number of months. In addition to the data releases this week, we've also got the second quarter earnings from the United States in full swing. We have Apple, the world's largest company by market capitalization, and on top of that, there's another 130 companies out of the S&P 500 releasing this week, so the likes of Berkshire Hathaway, Time Warner, Kellogg, Motorola, Pfizer, so quite a lot out there. I think Apple reports, for the record, Apple reports Tuesday after the close, so that's Tuesday after the close. That's it. Thank you very much for listening. Thanks. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.